You know, when you think about finance right now, there are two names that just seem to be everywhere: Tom Lee and Kathie Wood, right? There are these huge, high-profile bulls who've totally captured the market's imagination. You've got the data-driven strategist on one side and the visionary focused on pure disruption on the other.
And that leads to the big question, right? The one everyone seems to be asking lately. Is Tom Lee just the new Kathie Wood? I mean, his star is absolutely on the rise, so is he just following the same playbook she already wrote? Well, that's exactly what we're going to dig into in this explainer.
And, you know, on the surface, you can totally see why people make this comparison. I mean, it's tempting, right? They're both media powerhouses. You can't turn on financial TV without seeing one of them. They're both super unapologetically bullish, especially when it comes to tech. And this is a big one, they were both way out in front on crypto, pounding the table for it when most of Wall Street was, still running for the hills. But, and this is the key, those similarities, they're really just skin deep.
All right, so first up, let's talk about the visionary, Kathie Wood. To really get what makes her tick, you've got to understand one thing about her. It all comes down to her singular focus. And this quote right here, it just nails it. This is her entire philosophy in a nutshell. We're not talking about diversifying or getting broad market exposure here. Nope. Kathie Wood's whole strategy is one massive, concentrated, high-stakes bet on one very, very specific vision of what the future is going to look like.
So, what is that vision? Well, it's built on these 5 pillars: artificial intelligence, robotics, energy storage, DNA sequencing, and blockchain. For ARK, these are the platforms that are going to completely change the world as we know it. And here's the deal. If a company doesn't fit neatly into one of these buckets, it's just not in her universe, period. It's a completely top-down way of looking at the world that all starts and ends with this one big idea.
And you know, her personal story is absolutely central to her brand. She actually started out as a total traditionalist, deep inside the world of institutional finance. But when she pitched her big idea, this actively managed ETF focused purely on disruptive innovation, her bosses at AllianceBernstein basically told her it was too risky. And that rejection, that became the very foundation of her brand. It's the story of the maverick, the outsider who was told no and had to go out and build it all on her own. Okay, now let's pivot to our second figure, Tom Lee. And you're going to see right away how this paints a completely different picture. Because if Kathie Wood's brand is all about being the outsider, well, Tom Lee's is the absolute opposite.
Yeah, Tom Lee is the quintessential Wall Street insider. I mean, the guy spent more than 25 years as a top equity strategist at behemoths like JP Morgan before he co-founded Fundstrat. His entire career was built on giving institutional-grade, hardcore analysis to the biggest of the big money. He is a product of the very system that Kathie Wood's entire story is built on rebelling against.
And this is his machine, the Fundstrat engine. Their whole motto is analysis, not opinions. And it's a perfect contrast where Kathie Wood has her 5 innovation platforms. Tom Lee has this 5-part analytical framework. It's a system designed to pull in a ton of different signals, from the big picture macroeconomy to proprietary data models, market timing, what's happening in Washington, and even institutional crypto research. The goal isn't to bet on one single vision of the future, it's to identify probabilities.
Okay, let's get into the core difference here, because this next part is maybe the most important distinction of all. Seriously. The real difference between them isn't their market calls or their stock picks. It's way more fundamental. It's the structure of their businesses. It's literally how they make their money. And it all boils down to this. Kathie Wood runs an asset management firm. Her company, ARK, makes money from fees on the assets under management, the AUM in her funds. So her success is tied directly to her daily fund performance and whether investors are putting more money in or taking it out. Tom Lee, on the other hand, he runs a research firm. His main business is selling subscriptions for his analysis. His success is tied to whether his clients think his insights are valuable, not what a stock did yesterday. So to put it as simply as possible, Kathie Wood is selling you a product, the ETF itself. Tom Lee is selling you a process, the research behind his calls. And that one single structural difference creates totally different incentives, completely different risk profiles, and honestly, it explains pretty much everything we're about to see next. All right, so a tale of 2 ETFs. How do these completely different business models actually perform in the real world? Well, let's take a look at the products they're each most famous for. And wow, this chart of ARK's annual returns tells the whole story, doesn't it? It's the perfect picture of a high-conviction, all-in thematic bet.
When that theme is flying high, the returns are just astronomical. I mean, up over 152% in 2020. But when that tide turns, the crash is just as breathtaking, down 67% in 2022. This is the very definition of a boom and bust cycle.
And here is the devastating result of that volatility. A Morningstar analysis found that over a decade, from 2014 to 2023, the ARKK fund destroyed a net $7.1 billion of shareholder value. How? Well, because most investors, they piled in near the peak and then sold after the crash. It's just a shocking number, and it really drives home the real-world danger of that all-or-nothing approach.
Okay, now let's put them side by side. You have ARKK, and then you have GRNY, which is the newer ETF that's based on Tom Lee's research. The difference just jumps off the page. ARKK is this pure, concentrated bet on high-risk disruptive innovation. GRNY, on the other hand, is built on a much more stable foundation of U.S. large-cap stocks, and it uses a rules-based quantitative model. But look at the key criticisms. This tells you everything. Wood gets hit for extreme volatility and wealth destruction. Lee's main criticism? That he's a permeable, that he's too optimistic. That's a totally different universe of risk.
All right, so the final verdict. Let's circle all the way back to the question we started with. After looking at their backgrounds, their methods, their business models, their actual track records, what's the final answer here? The answer is the comparison itself is just wrong. It's a category error. It's kind of like asking if the star quarterback is the new head coach. Yeah, they're both famous, they're both on the same field, but they are playing two completely fundamentally different games. And it really breaks down into these three key reasons. First, Lee's business model is anchored in stable subscription revenue, not the wild swings of fund AUM. Second, his whole methodology, with all its different factors, is just naturally more diversified than Wood's all-in bet on a single theme. And finally, there's the branding. He's the ultimate insider serving the big institutions, while her whole identity is built on being the outsider fighting for the retail investor. So no, at the end of the day, Tom Lee isn't the new Kathie Wood. He's a totally different archetype. He is the classic institutional Wall Street strategist who has just been incredibly savvy at adapting to and, frankly, mastering the modern media environment. He's built something that's just structurally more resilient. Which, of course, leaves us with one last lingering question. Tom Lee has built this incredibly powerful media presence, this massive public following. You could almost call it a cult of personality. So the biggest risk he faces going forward, it might not be a market crash. It might be whether the strategist can manage the very cult of personality he has so masterfully created without becoming a victim of his own success. And, well, only time will tell on that one.